Hello, my name's Darren Hancock, and it is May the 23rd on a Friday, 2025, and we have had a heck of a response to tariffs, to the new bill. The market is responding quite dramatically this morning to the release of the new bill and some tariffs, I guess. So we have some volatility in the market this morning. Opportunity to catch some trades if you're keen on volatility moves. I'm looking right now. If we do, and again, the seasonal tendency is for us to drop in May. We talked about the first to the second week that there would be a high created and then start to drop down in May. And that's clearly what we're getting now. Mind you, this was we're finishing the second week, getting into the third week already before we finally start making this seasonal tendency to firm move down, whether you believe in seasonal tendencies or not, or their accuracy, we'll yet to see. I think in the discussion we talked about on the weekend or a few days ago, we were talking about this breaker and how this breaker, we'll see how that breaker holds price. If we're looking for prices to get back down into this discount area here, in the 18,000s again, then that breaker is going to be the one that holds price or rejects price, and then it keeps coming lower on the daily level. So that's the kind of the key player right there, is the 2516 level. Get rid of all these lines over here. Clean this up a little bit. So I'm looking at 62%. We broke this high here, the body, went higher, took the high, and then rejected. And I was looking at this mean threshold here, see if that would hold and go higher. But then we slowly started eating through it. It's like, no, we're not. And then we went lower to the 62%. Now I want to see if this holds when we start getting back above these highs and start to retrace back into this SIBI here. If not, this could be just the next big leg down. You can see quite a significant dive here. And we did have an SMT divergence here. Let's see how this candle here, so we made lower lows, and this made higher lows. So you'd expect to see, if this was an SMT divergence, you would expect to see prices go higher. These guys failed to go lower, right? And so you'd expect them to start pushing that higher. So we have yet to see whether or not we take out this low here. We have this level here. I'm just going to mark all this off on 3 of them. I don't want to start cluttering up the charts with a lot of there's an immediate rebalance right up to here. imbalance there. Well, you really have to include all of this all the way down to here. Include all of that there. Let's look at ES here. Yeah, if this is the next price leg lower, this could be quite $56.83. Let's look at some of these here. Through this. We're back into this level again here at 1644. I want to see it get out of this level. That's going to be like the line in the sand right there. The last one is this down here. We've hit that, gapped up. I want to see it stay above this level, but we haven't even got above it yet on a close. And you got your premium level here. So I haven't got much for natural gas right now. You're kind of stuck in the middle of this whole range here, right around the 50% level. So equilibrium. Copper's still hanging out in here, failing to make and stay above this premium box here. This imbalance. We're still stuck inside that. Crude oil. Boy, did they ever take a dive down there, hey? Same kind of thing here. We've got a little market structure shift. We have a market structure shift. And we're above this level here. So you want to see this guy hold price. We've come down, tapped it, and I wanted to see it. It would be awesome just to see it leave from there, but we're just petering out right here. Mean threshold of that candle is the line in the sand, and we're right in it, banging off of it right now. And we've got a high taken and a change in direction, trade back into it. So we're between this and this. That's what I'm looking at in oil. So you want to see a break above the highs here, come back, find some support at the highs through that Thursday's first value, first presentation, and use the first presentation to go higher for these equal highs above us here. If not, we get down through the mean threshold of this and look for a run back down into these little imbalances down below us here. Well, there you go. There was the DAX. move that we called yesterday. Beautiful. Totally nailed our up point here, rolled over, took out this on the downside. Right there, that imbalance. Let me get my, well, we called that like perfect, 8 hours in advance. Love it. That worked out. So anyway, let's look at the you'll see the reversal right here. 15-minute trade below it. You came back up, you tapped it, and then went lower. Like if you would have caught that as a short right there in DAX, and you're aiming for here, and it just blew right through your target, you'd be like, sweet, leave a piece on for, you would have caught a small piece here if you would have left that on there. Like you trade to this point and take 80% of your trade off and let the rest run. Take 10% off at the low and let the rest, the last 10%, do the damage. And whew, it would have done some damage. But that was a good call yesterday. I love it, love it. That's oil. We've already done oil. Gold. What is gold up to? Gary's like, Darren, just turn the little squiggly button. Key level or what? Love it. And draw this one across. Key level. Nice. Run to premium box. I'm just drawing this out and seeing how far it, what kind of response you get off of it. Look at that. Bang, bang, bang. Finally drove through it. And then you'd like to see it retrace back into this. So if you go down to a 1 minute or a 15-minute chart, or sorry, a 1 minute or 30-second, 15-second chart, I bet you'll find a reversal right there or a continuation on the upside. Here's your next upside objective. Did we hit it? Is that clean or what? Right off there. Beautiful. So provided we close above this level, look for continuation on the upside on the 15-minute. If we get back through this candle right here, I'd look for consequent encroachment of this busy and see if that held. If that doesn't hold, there's also this breaker, parent breaker of that big run all the way down. Its mean threshold lines up with the consequent encroachment of this here. So I'd like to see that hold and keep going higher. If we lose those, then we're looking for a deeper run back into this consolidation. Let's go to a 15-minute chart here. The only thing I can see here is that we went through the discount box, and you expect to see a retracement back into the low or the lowest down close candle. Look at that. It just closed below there, opened, tapped it, and then shot down into the discount box down here. So your question now is, where does it go from here? Looking at this level right here. If you close below that level, then look for a run back into these equal lows below you here. See, this one's already showing you a turn and change in direction. We went through it, now we're back through it and taking out the lows here. So if you look for a trade back into here, this one closes today and next on Monday, you see this start to roll over and come back down again. I'm still looking for down here. look for a retracement back into here and start seeing if we start to move back into this range, 50%, 62, so on and so forth. We got a big breaker right here, these 3 candles. So we'll see if those candles hold in Pato. And these guys, I tell you, they're peeking out. If this is going to be a turn, you'd almost expect to see this candle start coming back down again now. Bank of Montreal, nice gap up. Holy smokes. Palladium or platinum, whoever was in platinum. That's a nice little gap up now. This little mining company, I think this was. Just took out the highs. Pay yourself. Disney. Back up into the order block here. There's a little imbalance right there. We didn't get above it. We'll roll over. I'd like to see us come back into that. Go lower. The fact that we're just bouncing off of it right here gives me pause for more weakness. If you can get back through that level, look for Disney to get back up on top of this order block here. Find some support and push higher. If we fail to get through this level, or just come back into here and then roll over again, you're looking for a run on the lows in Disney. Ford, we're still expecting Ford to get down here. Still expecting Stellantis to get down into here. You want to see if Ford's going to hold off on this breaker right here. If that breaker takes out these lows, if that one holds, you're going to come back into it here. All the way through to here. I'm going to put that right at the bottom of there, and we're going to treat this candle right there. So I'm just lining up this breaker. We'll see how it acts inside that. Wheat. I'm looking for wheat to go higher. When did I buy that? When did that sit in there? That did not give me my order, so I don't even know when I put that on there. Ideally, now you've seen a body get above this level here. I want to see the mean threshold of this candle hold. And I want to see this just tap here and start going higher. And it's already ran up into the premium level already. So this right here would be like, that would be an ideal place for you to see that leave and go higher for wheat. So I am bullish on wheat. All the time we can stay above the mean threshold of consequent encroachment of this BISI, then we're looking for a higher price, a run higher up into this premium box here. So I'm going to mark this out as the upside objective that I'd be looking for, all the way up into here. And I know I'm already through it. Yeah, a portion of it. I'm right from here all the way to here. So I want to see that revisit this, pop through here and take these highs. Then I'm looking for a big ass run up into here. That would be my next 2 upside objectives for that. Sugar is now closed below this, popped up, but we're looking for a run below the lows now. So I'm looking for sell side liquidity here. Soybeans. Now we got in soybeans. Nothing. We're inside this mess here, so I got nothing for that. We can come back in here and find support right there. That's the line in the sand. I'd like to see that hit that all the way up inside this candle. I want to see that hold price anywhere inside here. I don't want to see it run through there, otherwise we're looking for that premium box again. And this gap here is used as support to go higher. So I want to see that kick off there, roll over, take out that 207 on live cattle, and come back down into this discount box here. Coffee, let's put that on an hourly level, see what we're dealing with here. On lower prices. See how we act inside that. Let's get cocoa up to an hourly and see what we're dealing with here. Okay, so that's the go no go line for cocoa. If we trade through this today or in an hour, with it before taking that out, look for that whole box right here to hold price, which is the box we're inside right now. And I want to see if that holds price and then comes lower and takes these lows. And then you're aiming for this busy old highs. And then I'm looking for this next box down here. Again, we're still back inside this little imbalance, this whole area here, this area right here of the American dollar. So you want to see it break through here, get through this daily volume imbalance here. I think this is what that one is. But as soon as we can get through the downside of this, get on the underside of that, use this and this as support to go lower, take out these lows, and we're reaching for these weekly objectives down here, because this could be another big leg down. So you'd want to see all these dollars start making their run higher. So we did break up above that level. We've used it as support, and now we've gone higher. That's a nice one from yesterday, and it hit our upside objective, 135.34, right on the money. Nice. That was in the last hour or so. And our little Japanese yen found support at that old level there. Went through it, came back through it, found support at it. Now I'm looking for this support. I'd like to see the yen get up into this upside liquidity right here. That's the upside objective I'm looking for. And out of curiosity, I'm just curious. You know how I left my little trend lines here. Yep, makes sense to me. I like to see that get hit now. All this should not see this low get taken again. I'd like to see that keep working its way up to that buy side liquidity now. Silver. just stuck inside this consolidation. You want to see a break out of here, come back to the consolidation for a CAM model 1 entry for a continuation to fill this next price leg higher. So you could just see a CAM 1 happening here and take off. That is a messy. So 5 minute, what's our 15-minute doing? I'd like to see this whole area just get displaced down, come back, use this as support. There's certainly nothing clean there yet. Let's say hello to everybody this morning. Kamal, yo, you're first through the door this morning. Good morning, good morning. Do you guys remember old Kirk? Captain Kirk used to be so excited, come through here in the morning. He'd be the first through the door, just chomping at the bit. I miss old Kirk. He's been gone for over a year now. Hadi, good morning. Ali, good morning. Peter, what's the deeper connection objective for DAX? The deeper correction for DAX? Where do we see DAX? Right there. Where's the deeper correction for DAX? Let's look at the daily. Right here. Just shy of it already. 277, 272. I'm looking for 261. If we start pushing through this and use this level, you could be doing huge correction. If you get through this order block here and this low on a close, then you're looking for, instead of a run higher, you're looking for this run back into this range. So look for 50%, 62%. Look for these discount boxes on the side here. 50% of this consolidation puts you around, and I'm just spitballing it here, around 861. Let's actually do an 845. That puts you right to the bottom of that. So that's a tap and go. Otherwise, you want to see this hold, this whole order block, just come in and tap it and leave right there, right on that candle's open, which is 246. You're just dipping into that premium box right here. Like that old premium box that you went through, came back to it, went higher, and now you've got that change in direction. Another one, and now we're getting below this candle here on a close. So we get below that one, find some support here, and take through and work on this one. Get more market structure shift here with a body close. Look for this candle here to support and see if you can't blow through this level here. So the important question is to see where this ends this week. You may not want to touch this, but just watch and see where this ends this week. And if we end below that level and below these two lows here, then look for this candle to provide some support to go lower. its low or its mean threshold. If you start to eat through the whole candle, look for another run back up into that premium level. And if you get through that, then you're on the wrong side. We're going back higher. That's how I would look at it on a daily level anyway. And it did go higher. Look at that, all the way back to a 79% retracement. These were the levels we pulled out. This guy failed. This is where I'm using fractal analysis with SMT. I don't just use the SMT just because of the diversion on the larger things. I look for SMT from a fractal perspective now. If I still stick with my original ideas of what I'm looking for a reversal, if you take the theory that I try to show you every morning about these inversions, I look now at this SMT stuff and I say, can I use that SMT as a form of analysis on specific data point levels? And which one of those data points would now hold price or support price or not? So you just draw these out on all three charts and look how the NASDAQ refused to go through its discount box, but ES dropped through it. This one was the stronger one, said, no, I'm not going through all of that. These guys said, just tap in below it, gather up some liquidity there below the markets, and now I'm going to go higher, right? So I'm trying to use that SMT not only as just a divergence pattern. I'm looking for specific key levels and to see which one of these guys use those levels and find support at them. So that's my little thing I was talking about earlier, or yesterday, trying to find fractal uses for this. So now we've tapped this old high here. I'd like to see that go higher from here now. I'm going to buy along there. Oh, come on. How come that I just clicked that? You little Why is it not going? I don't know why it's not letting me buy it. Oh, yeah, now take your time. Take your time, world. I just want to see it get up into here at that 6 o'clock window. I'm going to put that right up in there. Go a break even. Too much wiki. Watch that 6 o'clock though. Come back into that level one more time. Mean threshold. See how the mean threshold came back and tapped it? Could have stayed long on that. Just put it below that one tick below that low. Okay, we'll wait and see if we get this premium box up here. Coffee over there. Right there. Bing. Hit it. Nice. Nice. So once again, chase my stop loss too tight. Would have hit my objective up there. So there's the break in market structure to the top. Use the breaker. Find support at the breaker. Go. And I was pressing the button, so I'd like to have that's no use crying over spilled milk. Let's see if this we get through this level now, 6 a.m. And I'm gonna mark out my abs, my 6-pack of abs here. Oof, and this is all upside. I'm gonna go with the as soon as we can get through this level. I'm gonna go along there. I want to see if this gets back up into this regular trading hour gap here now. Looking for 2110. So I'm looking for the this consequent encroachment of the regular trading hour gap. Where's our 6 o'clock candle here? Six a.m. Well, it's pretty tight. There's a lot of stuff above us there. There's abs is 8:30 here. Just gonna move this up into here. Created that first presentation, tapped it, keep going higher. Take a partial at the mean threshold of this. Consequent encroachment. Which will be up here. 2116, so that level right there, we'll take a partial off there. Morning, Abs. Morning, Derek. Ollie, good morning. Order this on my Yes, I do, yes. Yeah, I miss a Kurt guy. Good morning, Darren. Morning, Lambo. Ricardo, good morning. Well, Darren, you've taken SMT to a new level. You may have just ruined my weekend with your thoughts. Down another rabbit hole. Yeah, that's where I went. When you pulled that out, Ollie, yesterday, I was like, oh man, here I go. I know what it's like going down that rabbit hole. So look at that now. Use your SMT based on the levels we've been talking about on every morning. We look at those inversion points. Look at those points now with SMT in mind, and look at the strength or weaknesses between the three levels. And if ES is the one that really moves the market, then see how we had failure to go lower. We went lower, we went lower. This one was the one you want to go long on because there's a divergence there in terms of that specific PD array. Blow your mind, hey? It did me. It's like, shit, man, that could be Now all of a sudden I'm falling in love with SMT. I didn't get it for years. I haven't got it, but then when the light bulb went on, my head said, oh, let's go down into the mine. Let's go down into the rabbit hole with this new light in the tunnel. So now I look at taking out a new high, and you go back to your little divergences there. That high's been taken. That high's been taken. That high's been taken. This one really strongly takes that high. This one just popped above it, and this one here just popped above it. So I look at specific levels now and I say, how are you all responding to those levels? I don't see an imbalance here. I see an imbalance here, and I don't see an imbalance right here. So if this guy closes through this imbalance and we start eating through this, then I start to go, ooh, I start getting nervous. We come back and tap that high there, start going higher. Tap this high right here, start going higher. And this one would be right here. So if we don't even come down to that level, that's the same one, is it not? It's this one right here. Yeah. See how we're not even coming anywhere near that one? So stronger of the three, wanting to go higher. And then how I just kind of keep looking off of those now, and I go, which one is this all in sync? Are we all like, this guy's pushing harder, this guy's finding support? They're all in sync with one another. And this guy, out of all three of them, hasn't even come back to that level yet. And now we're cutting through this one. We're cutting through that one, and we haven't even reached this one on this level. And he's already going higher, right back to that first consequent encroachment on a, what's this, what level at here? 1 minute. So anyway, a rabbit hole for you to explore, my friend. Got me. Look at this mean threshold and this little imbalance right here. High taken. Right into 5 minute, it was 886. So right down to this little tiny imbalance right there, 886. Institutional order flow entry drill right here on a 5 minute. Come back to the mean threshold. Nope. I'm going to see this candle find some support at it right here, but it didn't. So we might get one more little poke down into here. Now go to a 15-second chart. Again, now I'm looking for a reversal to go higher, because unless I get through this downside, the other side of this inversion fair value gap, and find some support at that, I'm looking now. You can go down to a 15-second chart and look for a reversal. Oops. Let's put that back. Let's put this one on a 15-second chart. Change in direction right here. Traded back up inside it. Body's respecting it. We went lower. Take out that low. You traded back up inside the order block. Went lower. Got a change in direction. We did not get above it, so you're using it for support to come lower. That 886 is what we're looking for right down in here. So I want to see if this gets taken, and we'll find support on the top of this to start running higher. So I want to see that high get taken at 937. Otherwise, looking for any opportunity now to see that go higher. Right now we're going bearish according to the 15-second chart. So retracement back into the 886 level, mean threshold, consequent encroachment. So you're just looking for any opportunity now to catch a reversal. And if it doesn't reverse, you would have seen it on a 15-second chart. And you can sit on the sidelines. Through the 886. So mean threshold. Now I'm looking for the bottom of this whole candle. That's the line in the sand, which is a fill of the fair value gap on a 5-minute chart. You want to see this hold here somehow. So I want to see that high get taken and this. So you got discount premium inside here. I want to see that get taken on the upside and then a close above here. Bull trap. If that rolls over and comes back down again, you saw that going green, you go, oh yeah, it's going higher. Wait till you see a break above here and there. There, now it's above there. Come back, tap that. That's a long. No, I don't want to see that get below that level right there. At 886 levels, that mean threshold. Nope, it's already through it. Now if it comes back into there, I can cut my loss. I don't want to see that come back to the open again. Traded through it, come back, didn't even get into it before it takes the low out. Coming lower. Bear trap. Got to see a body close above that level. See, I just went in for a long because I like the 86. But you got to get better confirmation for that. Inside that range, yeah. Choice there. Bad choice. I can see the reason why I got my ass handed to me there. Just because I was telling you, wait for a body to get above there, and I didn't take it. It was already up inside the premium portion of that small little range right there. And then you get caught in a bull trap. And I said it and still took it anyway. Dummy! All right. Watching down here now. So now I want to see, you got to see a structure break. We're starting to get into the next macro at 940 or 950, I should say. Now, if we start closing below this on a 5-minute chart, there's the bottom of that and this here. If you want to see that stay open as your graded response, ideal, not so ideal, worst case scenario, we fill this. If we start to pop through it, then look for consolidation back to the top of the consolidation at 83, 838. And see what kind of response you get off that. And how are these guys doing off of 8? So you look for these to come back to here. There's the equal highs right here. Equal highs, equal highs, equal highs. So see how the Dow Jones just not getting back there? It's holding right off the top of this guy here. And we're already digging back into 50% of this range. Take that whole range there. 62% will put us right in that. $62% puts us in the wicks. 62% puts us well into the mean threshold of that candle, and 62% on this one. See the difference in terms of the strength? This one's got the, it's refusing to get down to 50%. This guy's over 50, coming into 50. This one's like, forget that noise. I'm not even anywhere near that. So either these guys are going to drag him down, or this is the leader that's going to push price to go higher. And we're already through this level. We've come back in. Oh, we haven't even tapped that level yet. Let's look at them and make this a little bigger so you guys can see this here. So look, see how it's starting to make another run for the high here? These guys just aren't. So whether that one rolls up, fails, or takes out its high and then starts to come down after the fact, that might be the, look, if these guys keep dropping now, you're just coming into 50%, hasn't quite touched 50% yet, nowhere near it. So of the three inside the ranges, this is the weakest one so far. This would be a whole new thing for me to start developing my eye around specific pressure levels and support levels in each one of these, and why, which one has influence over the others. I'm still not 100% on that one yet, but I will get it. There, high's taken now. Run on the high. Now, if this takes out the high, there's your SMT divergence right there. When that high gets taken, this one's got the highs. These two refuse to go lower unless this one's the leader, right? So we've got this consolidation. You've popped up above it. You want to see that go long here now. I want to see that candle hold price and start going higher. And these guys are all coming up with them. Does that make sense to you guys? Am I just talking out of my ass here? Do I potentially have something here? There's another price leg higher. Hasn't taken out the highs yet. We have equal highs, lower lows, lower highs, and lower highs. So now if we take this out on the downside, I'm looking at cam 1, 2, and 3 here. Let's see how she acts. Cam model 2, no body below here yet. Take out those highs. Come on, I want to see that. An SMT here. Well done, D. We'll wait for macro 10 a.m. news. Housing games have begun just when I thoroughly we're going to have a clean run through the, it makes sense. I've always watched all three indices for moves. You are on track. I just never heard of SMT. Good morning, family. I keep forgetting I keep forgetting to consider SMT. It's beautiful to see in action. Every signal suggests it wanted to lower prices, yet with the gap below us, the S&P and the NQ, gotta think of somewhere we're going to go there today. But not nice when we zigzag in the first fair value gap. Let's do the push up here. You're actually clearly a few things up for me. LOL clearing. Yeah. So do we have a run on that high? What's the high of that candle there? Let me just get this out of the way now. We clearly know we have not come down to 50% of the range. These guys have hit their 50% of their range. So I want to know if this is the next price leg higher. This candle's high is 41,600 and this one's 41,599. So one tick below that low. One tick below. But see how it's still holding price? It refuses to drop. These guys are dropping. It doesn't want to give up the ghost. And then when it finally does, if these guys bust through that low, then there's the low right here. That's the low candle. So if these guys bust through that level, we just have to wait for that guy to give up the ghost and come through it as well. So let's wait and see. This is why I love the community. When you guys got some ideas, when you can bounce ideas off of people and you get your brain going down a rabbit hole and you bounce these ideas off of people and see how you get their little brains going down rabbit holes. I tell you, a community banded together instead of everybody just trying to be their, you know, be the best for themselves. The community helping each other grow. I tell you, that's where we're really going to get some explosive traders. It's using everybody together. That's what a community liberated, strengthened, I don't know how you combined, the power of people coming together. That's what I like to see. And so thanks for bringing that up, Ollie. Thank you for being persistent with this SMT thing, because I just wasn't buying into it. But now I'm starting to look at it and go, I should have embraced this a long time ago, because I'm starting to see some interesting things in combination with what we're looking for reversals and stuff. Um, 2690. Oh, you're looking for down here, Derek. That's gonna throw us off, man. Somebody gag Derek, tie him up. He's gonna start screwing with the market and make it come all the way down here. We don't want that now. We want to see a retracement, a little bit of retracement back into that big dive down this morning. Derek, your bees are calling you. Don't make the market come down, Derek. Good morning, Mags. Sandra, good morning. Craig's trading crude. Crude. Get that nice little discount box here. Run through the premium level right here. Body trades above it, comes back into it, and you got a nice long there. Take out the high, pay yourself, move to break even, and then let the rest run for, I'd say look for old low here first, and then look for consequent encroachment of that fill old highs. Where you've already got the low. You already got the consequent encroachment. Now fill in old highs. Come on, Craig. Get in there, buddy. I hope you're still in that long. That's a nice little reversal right here. That's a nice little place to catch along. Right off that premium box there. I've been wrong before. Good morning, everybody. 690 is old. We tried low, I think. Looking for 512 on the daily. 512 between you and Derek. You're gonna kill us here, or kill my idea anyway. I'm still bullish all the time. We can stay above here. I'd even be bullish if we just came down and tapped all the way off this yellow line here. I'd be bullish all the time we're above that line. We get below the line, I'm not so bullish no more. That's 814. So you guys want to go another 300 handles? Haji, I thought we were partners. Don't do this to me, man. Don't take it lower. Let's go higher. Let's get back into this thing. Come on. I want to see some more regular trading hour gap fill here. Okay, we're going to have a tug of war. Haji's on one side, Haji and Derek. I'm just going to tie myself to the back of the fire truck and say, come on, boys, pull me along. Five trades already. Crude tried green. Happy. Small positions left in crude. Yes. There's, just get that fill right there. 61.29 and then run for the highs here. You're already trading above that little level I like right here. Lovely, lovely. There's the fill. Come on, give him the fill. 61.29. Then take the highs. And then you're looking for up here, Craig, at 61.64. And then see if you can take that old high out there. There you go. Go, go. Come on, Craig. Let's get you some money today. Well done, son. Well done. Where's gold? What's gold up to? Retapping our premium box. So we have a almost complete fill of this BISI. We're looking to see how we're going to react off of here now. We can get back into tapping the consequent encroachment of this CAM model 1 and keep going higher. Otherwise, if we run through a CAM model 2 on a close, 50%, look for a run lower, and then run into this whole box as CAM 1, 2, and 50% of that would be a CAM 3 for lower prices. Right now, let's just think bullish. Bullish until proven otherwise. There's our discount box. Look at that. Right to our line. We wanted to see that. Or no, we wanted to see if it would break that. It didn't. Okay, good. So we've got the run above, come back in, find support, push higher, pulling using your take profit model 1. Your take profit model 1. So if you were in long here, we break the high, come back into it, tap it, perfect entry at 108.922. That's a perfect long. 50%, pay yourself, take your trade into break even, hit 62, now move to 50. So you'd be sitting like right there, pay yourself there. And we're looking for 70% right now. And as soon as it hits 70%, you pay yourself and then move your stop loss to 62. And so on and so forth. So you're paying yourself on the way up. So this is a zero stress trade and you're getting paid all the way back inside this large range here using a 15-minute chart. perfect entry, zero drawdown, instant profits using the take profit model 1. Okay, so we'll watch and we'll see how well. If it hits 70, you'd be paying yourself again. That is the classic 70% optimum trade entry reversal. So you'd be paying yourself, even if this is on the wrong side and comes all the way back down through you and takes out these equal lows. You paid perfect entry and you paid yourself all the way up here. Nothing wrong with doing that. So anybody tells you you shouldn't be paying yourself taking partials, like Michael says, is idiots. You can pay. This is a beautiful model for trading internal range liquidity, and it's a beautiful technique for managing internal range liquidity for quick profits. And it gets you to break even real quick. And then don't sweat if it runs higher and comes back and taps you out. Who cares? You can get back in sync with it again once we get above this level here. So you watch 70%. Imagine paying yourself there at the 70, right? Come on. One little pop. Right there. 70%. Pay yourself there. Move your stop loss to 62. So you're already, from a perfect entry right here at 922, you're already up 130 some plus points. No, that's not. That's 108. So you're already up $1,000 here. Look, hit right on 70. So now you've paid yourself there, and you're sitting right here as a stop loss. So if that rolls over and comes back down now, and doesn't fully come back to these breakers and stuff, then you can smile to yourself and say, I got perfect entrance, perfect exit. Rolls over, and you just smile to yourself, say, take profit model 1, man. Gotta love it. Anyway, meanwhile, back at the ranch, gold is on a run. Gold's running back up into this order block here. So we've traded below it. We come back and just tap this, and you see this turning into a wick again, and we start to run back through this level. Then like right there, you see how it's just come back and tapped it perfectly. Now you see how it's starting to react off of it. If we start to roll down here now, then I'm looking for a run back into this consolidation. Right off that level there. That's a 15-minute chart. Anyway, let's go back to our regularly scheduled program. Look at that little monster. Just kept running. These guys haven't taken the highs yet. Look at that. Just like full on busting through. It held back all those dudes. So when someone says ES dominates the market, well, we saw how the Dow Jones said, hell no, I'm not going lower. You guys pulled right back to 50% of your range. Both of you. Me, no chance, man. I am not interested in getting back that far. I'm moving, and that held back. That's a nice springboard. This guy was a limp noodle all the way back, and now we're starting to try to get above this level. This guy's above that level now, way above, not even close yet. So we have an SMT divergence now. That one just popped up above. So SMT divergence at this particular point. Now, if you go this in a lieu of Ollie's point, and that's like you're going to only look for these SMT divergences during the time of the macro, and then you can see, ooh, my voice went deep all of a sudden. Did you hear that? Hello, good morning, and welcome to the show. Oh, I just suddenly went low. Okay. Did I just hit puberty? Was that what it was? Anyway, so you're looking for this level now. We've got this high has been taken. If this now becomes the reversal point, so divergence, high, reversal. Now, if it takes out this low, then you can say that this refuses to go higher. Look for that level right there, this level right here, and that level right there. This one occurs above the highs. These ones occur below the high. So again, I'm just trying to put it together, guys. So I'm trying to use the SMT for key levels to find support. So this one's been traded back into. This one hasn't been traded back into. And this one has been traded back into. So we have two trading back into the fair value gap. One that refuses to trade back into it, but one hasn't reached its high yet. This one has, and so is this one. We have not closed below it, have not closed below it, haven't even come back into it yet. So what say you, Ollie? How do you think, what do you think about all that lot? I'm with you, yes, waiting for stops higher to be hit. Took my first crude trade ever after Craig mentioned it. Nice and easy. It's crude, always so nice. Good for you, Sandra. Okay, out of crude, 6 green trades. Traded poorly, should have made more. Oh well, not sure if I do anything else. You know what, Craig, if you got 6 green trades, that's not traded poorly. As far as I'm concerned, good for you. The Dow is just 30 stocks. Interesting, hey? Just 30 stocks. Where's the largest investment? So that's, if you use the idea of where are investors putting money? Well, if these guys are holding, if these guys are not, are going lower, and this guy refuses to go lower, where's the investment? It's the idea. If you've got investors, we have more money flowing into Dow, refusing to take it lower, and then it goes higher and takes out its highs, then these guys, all ships rise in high tides, right? So now we're through that level. See how we've traded below it? We're coming back into it. Now we could get the rollover. We're through this level here, and now we're slowly coming back into this level. So this guy leading the pack, if he's coming lower versus this one's following suit, this one hasn't got there yet. And we have the divergence that's happened here already. So the narrative is this holding these two back? Or is this one trying to pull these two up? I don't know. I still try to work that out. What did they say? SMT divergence. Oh my God, this guy. Yeah, Derek, I was totally against SMT now, but Ollie's got my little, he fired off that one brain cell that you've been trying to pull the cord on for years now, or a year now. And Ollie got her started. He stuck with that lawnmower and got her going. Okay, so now I'm ripping around on a ridey mower. You can't stop me with SMT now. So look for this next price leg higher. Now that we're trading back through this level, look for higher, and these guys are going higher. Delicious. Sorry, you boys, you're not taking me lower. We're going higher. I win. That's funny. You're right, DC. Don't know what you don't know. Now I need to go back and understand this better. These radio voices kicking in. Apple's largest for the Dow. Dow strength is due to Apple's bounce. Looking for a long now. Arm wrestling Hadi and Abs, or Hadi and Derek this morning. That's funny. All right, so now we've got a break above, and we've come back and tapped this old order block and that kept going lower. So now if we can come back and tap this in sync with this one's already tapped its highs and going higher. These guys have yet to tap these highs, tap them, and then start going higher. So I'm going to try going long off of this old high back here, right there. I'm going to try and go long right there because I like that consequent encroachment. I like to see that hold price now. And now I'm going to put my stop loss just below this level here because I don't want to see that fill and I don't want to see this order block get traded through. So we'll see if we get, and this, it'll be this big one here too. So we'll see if that takes me out or we go higher. And we're still looking for a fill of this regular trading hour gap. 50% is still at 2016, still looking for something up here. If I can break that high, I'll pay myself one portion at that high, another portion there, and leave the rest on to go. Let's do that. You turned kayak? Suddenly do. I don't know what kayak is, but thank you. All right. Let's get my partials ready to go. So we're just keying off this high and we're looking for consequent encroachment. Premium box. Should probably pay myself there, but it's really small. If I get above that high, I'll move to break even and pay myself a portion there. Should be rejection block. I don't want to see this go from premium, which we just hit there, all the way back into discount here. That's way too deep a run. So if you want strength, you want to see this hold price here all the way back to mean threshold of that candle. That would be a full fill of this, which you don't want to see. So graded response, you see it come back in here. You want to see it leave now. You see how it's just lingering around in here? I want to see that go. Start pushing through this level. That was exciting candle till it went back to a wick again. Then it's like, you see these candles, that's not a good sign. So we have a deeper run back into here. So now I'm looking for what's 50% of that run. If we come lower, what's 50%? 50% is just underneath there. So if we just wick below that, 62% is a full fill of that range. Right there. Oh, no, that's not it yet. Right there. There's 50%. $62. I tell you, that's why when you look at these things, you see, I want to see it leave, and it's not acting the way you want it to act, and then it starts to roll over. You go, ugh, not doing what I want it to do. 62% retracement is what you got to give it here. We've returned back into this old high. Let's go start pounding through here now. D level response. So graded response, that's the D. It's a pass, but it's a D, and it's right off of a breaker. Not really a breaker, no, more like a mitigation block. Didn't take out these lows here. This would be the breaker that takes out that low. Either way, they're pretty close. So we're back into that top of this one. start climbing higher. And this slow little wiki candles, not what you want to see. You want to see some explosive price action out of here now. Not waffling around. This mean threshold of this candle, now it's been validated. That mean threshold has to hold price now. Remove this. That's the line you don't want to see it creep through. Right there. See how we just came back up into here, wicked away. So we've traded below it, back up inside it, coming lower, taking out the lows, traded back into this order block, and now we're going lower. So we could be coming all the way back into here. I'm out of that. I don't want to see wicks even go through here. Watch for a return back into this level right here now. Tapped it, see there? It just looks like it's coming lower. Just by that there, did not get through the rollover, not good. Eats through the mean threshold of that candle, takes the low, comes back into the low, and ate through that mean threshold, so I'm on the wrong side of it. Now you want to see if it gets through the downside of this now and goes lower. Let's tap the bottom of that. That's definitely not what we wanted to see. So you'd have to see this high get taken again, that little breaker there that takes out that low. If we don't get back through those levels to run back up through that top level, then we're looking for a run on the lows here now. And we could be running all the way back into this discount box down here. So my stop loss would have been taken. Fail safe tells me as soon as we start wicking through this, I'm on the wrong side of that. Well, I knew you're on the wrong side of it when you saw this here, but you have to ask yourself, how much am I willing to give up coming back inside this range for this to go higher inside this regular trading hour gap? And you got to have a line in the sand for, you say, nope, I don't want any more. So you could have taken a full loss or that logical place. So that's how you kind of debate it. You saw it changing here. You have to ask yourself, how much are you willing to give up at that range before it says, look, I'm heading much deeper than you think. So there's the trade through that level, come back to that level, come back lower. There's also, you have to include this little piece here. Sorry, I did not include that little guy down there too. You have to include this little imbalance with it. So body trades through it, come back, tap it. Now you want to see this low get taken, which it has. We've got range extension done. Now you want to see it get back through this candle's high for us to go higher. So we have to trade back through this. We've swept the lows. Look at that, right on it. Tap it. Wait for a body to get above here. Thanks, kid, for playing with it more. Which asset is the most related to? Crude is an animal. I have no idea what is related to. Not sure on that one. Out. I don't know how traders trade all day. My brain and emotions are worn out. Can't think clearly except buying Disney at 107. See, we traded back above here now. Now that's a long body above here. So I'm going to buy one long there. We've closed above here. Use this order block. Now I'm going to move into stop loss into break even. We could come back and tap me out here. No, I should stay just below that low still. It could just come back and tap this higher low. Okay, now start ripping it up. Let's go. So changing direction, taking out a low. Wanted to see that clear the high. It did. Use this order block to go higher. It has. Now I'm going to go to break even. We're right back up into that little premium. I want to see these 3 candles get taken to the upside now, and then looking for this premium box up here one more time. Now I'm going to sit my trade just below this breaker here, because I want to see this breaker hold price now that we're above it. I want to see that hold price right there and keep going higher. If we take out that high, I'll move in behind here. That breaker holds. You want to see this one here trade above here now. There's the premium level. So you'd pay yourself there. I don't have a, I've only got one on, so I guess I could just take that off there, take my, and then wait for it to trade through. So I'll take that one off there inside that larger range. Now I want to see it trade through here, use this for support, and then I'll get back in sync with it to go higher. One, good. Now let's get back in sync with this. Now I'm trying to use this one, this support here, to go higher. Pay yourself a portion at the high when the range extends. This is the first one right here. So pay yourself one there. So take yourself there. Move to break even. Pay yourself there. Let's see if we can't get down. I don't want to see it come through there again. I don't want to see it tap. Now watch it go higher again. So we extended the range. We're inside this one here. 50% of that wick. So we have an immediate rebalance right here. We're back below this level. Watch that level for support. See, that's why you got to quickly pay yourself. Move to break even the moment you take that high. And now look at that. That would have been a nasty one had I not moved that stop loss. We broke that. So you have to pay yourself. There's small little runs, but whatever. That's following the rules to the T, to the letter. And it quickly turned on you, right? Now we'll see if this level provides support, or we get back below here and you're running all the way back down into this level again. I want to see that hold. Back to the breaker again. And you can mark out the breaker. Right in the consequent encroachment of it. Let's go. Let's get up there. I'm going to hold that. I'm going to take a long there. I'm just going to sit below the breaker. I don't want to see this mean threshold give way now. Yeah. No. Okay, got relative equal highs. Looks like we're going to do another little run down into here. Discount box here. This whole breaker here. This is the parent breaker on the run that takes out these highs along the way. So we'll see if we get a retap at that level. That's tapping the high. Once you check the side times that you won't enter, gives you a mental break where you can relax again. Yeah, when you're like, I'm really chasing specific levels and trying to pick a low. If I was following the 15-second, oh, this is a 15-second chart. I thought that was a 1 minute chart. I thought it was moving kind of quick. All right, so there's the discount box again. Got to break above this level here. It's got to take that candle out and that candle on a close for me to start looking for going higher again. And if you want a decent market structure break, you want to get above these old highs here and then start marching higher. It's a 1 minute chart down this. 1 minute chart right there and right there. Right in the money. Let's get rid of that here. So on 1 minute chart, there's box to box. Find support here, start going higher. All the way down into here. Right there. I don't like the wick through, but there's a little tiny imbalance right there. See where that closes now. I want to see that go and turn into a big wick and start heading up. There you go. Now I want to see that get through this level here. Find some support at this level and take that little imbalance right there as well. So let's include that in our little chart. So I want to see it break through here, find some support above this mean threshold. So body breaks above, comes back, find support. If we get back through this level again, look for we're inside this range. That level there, you want to see that hold price and start pushing higher. And if we start to get back into the larger range, you want to see this level hold price and go lower. We've already hit it once, so you don't want to see it come back into there. Though it can come all the way back to the bottom of it. If you're just bouncing around inside here for a while, look for premium, discount, and bouncing back and forth in here. Wicks doing some damage, waiting for a body to break out of these two levels. Inside the smaller range, if you want to see this continue to climb higher, that's your next support level. So you want to kind of see this right here. You want to see those between these two if you're battling. Otherwise, inside the larger range, here's your equilibrium. So find support to run higher, find support to run lower. So you're bouncing back and forth between these two premium and discount ranges inside, sorry, premium and discount levels inside these, this small little range here. Are you still looking to tear me down, Derek? Are you still trying to rip us down? Let's just let us get to the 50% at least of the regular trading hour gap first, and then you can tear us down into the lower range. I just want to see at least 50% of this regular trading hour gap get traded to. It didn't make it before 10:30. But I'm kind of hoping it makes it up there for 11. Kind of makes you wish you just would have left your first trade on there this morning, eh? And just leave it alone. Let it do all its thing and just trust that it's going to get there. That's my biggest problem, is when it's trading back against me. I look at the change in directions constantly, and that's what keeps me out of these holding longs, because I'm playing inside the trees in the leaves, right? We're above it now. Let's go one long there. No, I don't want to see it get back below this level. Now we've broken above it. I want to see that start pushing higher now. We'll go one more there. Okay, I'm going to wrestle with three of you then, am I? I'll wrestle with you. What's these three up to now? Equal highs, lower lows, lower highs, lower highs. Change, reverse. I don't want to see it get through this low. If this takes me out here, I'm done. I won't be doing any more trading on that. I'm looking at logical levels, and if they're not acting the way I want them to, then I'm out of there. That's why I've got that sitting just below that fair value gap there. Oops. And then I'm wrestling Derek and Ollie. I just want to see it get to the 50% of that range without taking me out a second, third time. Stand by. I'm going to say, give my wife a kiss goodbye. If you would have just stayed in that long at the bottom when you started the stream, you would be so up. Yeah, it would be. This is classic for me. Come out. It's I I don't stick in it, and it's right at those 9:30 opportunities, right? You can catch these beautiful situations at 9:30, 10 o'clock. First fair value gap reversal at 9:30, 10 o'clock. You know, you can catch some stellar runs. So trying to stay in, especially when it starts getting into this chop, it really throws you off. Like if we have a clean day, man, you can catch massive runs. Like if that was just all clean, clean, I'd still be in it, but clearly I'm not. So, well, I am a little bit here, but whatever. We have old first presentation. A few confluences there. Volume profile for the session says volume high is around midnight open. I want to see at least previous days lows taken before lower. If we're going to the top, regular trading hour gap. We're currently struggling to get through an old first presentation. May 13th. Higher high, lower high, lower high, higher high, higher high, lower high. So if these two are lifting up price, this should start coming higher. I just want to see this pop up nice and high here. Enough to force these guys up for another run higher. Watch that discount box again. Already in the discount box here. So if we look at the it's in the box. Just about to tap the box. Hasn't even come close to the box yet. So in, tapping, not yet. Come on, drive them up. Bring them up. Drive above that high. Force these guys to drive their highs. You can see this weak, strongest. Order block, above, barely above. Just barely above this candle. This one, we got a nice clean one. This one, even nicer clean one. So use this. If we can get above here, which I like to see that high get used and supported and go higher. This one, support, go higher. This one, we haven't even got up there yet. So we have not broken that high. We have broken this high. And we have not even broken that high. So two that haven't, one that has. Now this one here, I'd like to see that hold price all the way down to this candle's high or open at 659. That's the weakest part. Right there's the line in the sand. So motivate, go higher. Support right there. This one here, we may even go back into the mean threshold because this is the weakest of all three. This one has not hit that candle yet. That one's hit the high. That one's just about to tap the high, hasn't quite hit it yet. And this one's definitely into the high. I know I'm being maybe a little ridiculous with the SMT and which one's stronger and stuff, but that's how I'm kind of playing with it right now. The big blue bus is coming. Oh, Hadi, you guys could just tear this against me here and rip right through. Your big blue bus could come ripping right through me, take me out, take this out, and then start ripping lower. Then I'm going to have to run to the next bus stop and join you guys. Mean threshold already. Touch the highs. Tap in the high, the open. You want to see this start getting up there now. Line in the sand. Next one. Next one. So each PD array, high, open, high, open. High and open are pretty much the same. So you're looking at the mean threshold. So they're hitting levels where I don't want to see it get through the mean threshold. That's already hit the mean threshold, so I want to see push, push, push. I know you're looking for a short, Hadi. Derek's looking for a short. Ollie's looking for a short. I just want my 50%, 21.15, and then you guys can have your short. That's my line in the sand there now. Kevin, I've got somebody who's with me. It's going to come back and get me there, Kevin. Should have paid myself at the, well, I didn't make the high. I was going to say, like, I should have paid myself at the high here. Didn't get up there. They're just not going to leave that untouched. Now we're down to the mean threshold of this candle, the mean threshold of this candle, and we just wicked through the mean threshold of that candle. Now watch that little bastard go higher on me now. Kevin, you have to bring it home for us, buddy. I tripped in a gopher hole, clearly. I could have stayed below that, but if it takes that high, pay yourself, move to break even, and wait to see if that macro gives you what we're looking for here. Watch that run up into there and piss me off now. $8.18. What are you looking for? $8.40? Is that the consequent encroachment of that? $8.21. This was the next price leg, wasn't it? Remember we were looking for that price leg here? $8.29. That'll put you right in the consequent encroachment of that. Let's see if that last price leg finishes up. Yeah, it would have got me anyway. Okay, Hadi, take your short. I'm being denied. We're back inside this one here now. You got to put it all the way down to there. So now this one here is back to here. And this one is back to here. There's a small one down there, but if you break this on the close on the downside, which we have literally, no, we're running below it now though. We've taken out this candle on the downside. You're closing below the discount box. There's another discount box here. Take this as a market structure shift and then use it for support to come lower. And then a D, you guys can take your big runs down. Wait for a market structure shift now. You're definitely below that level. Come back up into that level. You haven't got anything down here. We could retrace all the way back up into this candle here. There's the discount fully filled. Remember that last little piece down here at 574. Kevin, did you get out of your trade? It wasn't doing what we wanted. I think this just not going to leave that untouched. You'd want to see them just run that up into that regular trading hour gaps, consequent encroachment. That's just too flat, man. They're not going to leave that untouched. I'd be very surprised if they did or came back and got it after lunch. Let's give Hadi and Derek and Ollie here their 690 and then reverse and come back up and take this lot out after lunch. See, now we're tapping that low, now coming lower. We're inside this one still, and we're still inside this one. We've got a wick below. This one's holding, and we've got a body below. So below, below, confirm below, roll over and come lower. This has not broken a body below it yet, and this has not broken a body below it yet. So now this one, which was the leader, is now the weaker one out of all three. This one's the strongest, this one's the next strongest, and this one's the weakest. Body below, wick below, nothing below. Come back in, find support inside there. Come lower, and I want to see these guys giving up the price. If this is the leader on the way up, and it's the leader on the way down, that should pull these two down. See how we just found perfect entry there for a short, looking for range extension here. And that one's closing below now. Tap it. Now come short. And just keep coming. Extend the range. We're just shy of extending the range here. And these just tiny little candles. We can come all the way back up into that high right there. This has done its thing. You don't want to see it trade back through that level. It's been in here now. You want to see that. You can tap the bottom of it and come lower now. But I don't want to see that coming back up into that wicks high. 25% would be nice. Roll over and come down. This one's already broken below. Come back inside the order blocks mean threshold. Keep coming lower. I don't want to see it go back through that. And this one here, you want to see it finally bust through here. Take out the mean threshold of that candle. Keep coming lower. Mean threshold again. I don't want to see that pop up there. Range extension. Here we come. So who's going to go sweep the low and then start pulling back in and taking these highs? And who's going to hold off on sweeping the low? Is there going to be an SMT divergence here? One taking it, the others don't? And looking at the support level, this one's lower. This one still has not, that one may have just closed below it here. That one's definitely closed below it. We've hit the rejection block. No rejection block. Rejection block. No low. So 2 rejection blocks and nothing yet. So this one's holding and barely getting through the discount area. See how it's holding itself inside its one? This guy's not. This guy just found perfect support here. And I want to see that keep coming lower. This guy hasn't given up. That guy's coming right back to the edge of it again. Still looking for range extension. Consequent encroachment is holding price here. I just put boxes on this, which is what I typically do. See that consequent encroachment's holding price. Range extension. Woohoo! Perfect. Range extension. Consequent encroachment. Staying on the bottom half of it. Finally breaking through to the this one's taking the low, not taking the low yet. Now it's coming back to tap this box. Now you want to see it roll over and come down. So it's trying to do what this one did earlier. Came back, filled beautifully, took the range extension. So of the 3 that are really clean right now, this has been the cleanest. Beautiful entry for short. Take out the low, pay yourself, move to break even, leave the rest on and let it run. See if this continues going lower. Negative still in and green, letting it play out. Oh, you're going to really hold on, hey? All right. You must be way down there then, entry in that, Kevin. Short, partial. Thanks, D. Have a good weekend. Gonna go chill out and weed the garden. All right, Craig, take it easy, buddy. Homegrown corn is the best. Oh, yeah, I bet. Ollie, 938. Where was the SMT above and entered in? Inversion fair value gap 1012. First trade of the session. Partial. I didn't take the equal highs above, though. Still in. Good for you, Hadid. So, no low taken, lows taken, lows taken. The divergence right now. And it's in 11 o'clock. It's in the macro time. So if this holds and we get back through this level, then I'd expect to see ES run these highs, because it failed to go and take out its low. These guys did. So now you want to see them break through their level. It would have to break through this level here to start running back up to that premium box. Otherwise, next price leg lower. You're out, Hadi. Good, at least you got some money out of that. Good for you. This did not even hit the rejection block of this candle, so what are we doing for these other levels here? Gold broke its high. We came back to the high, kept going higher. I like that on the hourly. Oil, it's coming back into this old high. You want to see that start springing off of here now, going higher. Take out that candle. Now you want to see that go higher. I'd even put a long on there. I like that idea of going higher into small range run up there. The stop loss will sit just below here. I want to see if this candle here holds price and goes higher. We're off this, we're through that level. We're back inside this level. We've just tapped the top of that high, getting a response off of that. I'd like to see that start to go higher, fill that fair value gap, at least 50% of that. That will put you right in this little breaker here. It takes out these little highs. Parent breaker of it, or it's not a parent breaker of that run because it's a mitigation block. So if we come back up into here, got to keep this tight because this may just bounce off this candle and roll over and come back down for a lower run. So you got to keep, I don't want to see it come back into here now. You can do a take profit model 1 on this. Just hit 50% and I'll go to break even and then see if it runs. I've only got 1 on, so. Where am I sitting? I'll sit right there. I don't want to see half that wick get taken anymore. So as soon as it gets to 50, move to break even, plus the cost of the trade. If it gets to 62, I'll move to 50. I expect to get taken out all the way up inside here if it doesn't come back and take me out. It's a zero stress trade there. I just want to see if I can just nibble a couple of bucks out of this small range here. Again, the fear is that this order block here that takes out this little high, these little highs, is going to hold price. And the mean threshold is right at 62%. So $67. Yeah, we might get right up into that 70%. Nope. Break even. That's why you cover your ass. There's another great example of take profit model one. As soon as you get 50%, take a chunk off, move to break even, and then if it does this kind of shit, you're safe. You at least got a stress-free trade off there. And you're on the wrong side of it, and that candle did hold price. And you got just above 50% to run the next price leg lower. So now I want to see that give up this candle here on the downside, come back, find support at this, and look for the next price leg lower. Find support off here, keep coming lower. Are you still in this, Kevin? Are you still long on that? Because you got lots of indications that it's coming lower. That would be a 5-minute line in the sand. You don't want to see that mean threshold of that candle get traded through. Otherwise, we're looking for a run back to this consolidation, I think. Oh, that perfect level right there. Let's see it start coming lower now. This one's holding right now. This one's holding. So that those two are in battle with one another on a 5-minute chart. That held price right there. And this has got a little wick through it already. So it's almost like, guess where I want to go. That one held solid. That one gave you a little poke through. You want to see if this wick holds any pressure now to stop and prevent it from going higher, and look for that to come lower. You're tapping this old Bissy on the top here. Mean threshold of this candle, 883, 886 again. That 886 level. Let's see if we get a run higher. Mean threshold of that candle. It's a 10 candle, so I'd expect to see that create the high and this start to come lower now. right at that mean threshold. That'd be a nice first short right there as a 9-10 turn. If we're looking at, let's look for divergences lower, lower, higher. It's traded above that level. It's coming back into that level. It wants to go higher. Dow Jones wants to go higher. And these guys here, that guy's NQ is bouncing off of the order block's mean threshold. We have not got a body above here yet. This is through the mean threshold on a wick, and we have not closed above that level yet either. This one has closed above the fair value gap. We are trading back into it. Now it wants to go higher if we stay inside this box here. That wants to go higher. And I'd be looking for something like up here. Again. So let's see, you're watching right here now. And that's still down, but if we break that high, that'll be the first little divergence higher. It refused to go lower, and now it's going to break this high. It wants to go higher. This one here wants to go lower, lower, until we break that high on a close. We break this high on a close, and we did. We literally opened and closed on it, so that wants to go higher. We could come a little run down into this little box right here, and I'm going to pull that to there. Literally close it on it. We haven't got a body above it yet. No body. Lots, a couple of little wicks. This is wanting to go higher. So I want to see this level. I'll put the sticks on there for you. We want to move the ball from here up to here. So far, no body breaking the high to confirm that higher run, but right now you want to see this high get taken by playing inside this whole sticks, a couple between the sticks here. We trade below that one right there on a close, then mean threshold, that's all you're going to get of this wick, and we're going to run through the lows. Refuse to go higher, refuse to go higher. This wanted to go higher, and now we're getting right back into the bottom of it. So watch where it stops right there. Mean threshold, wick. Watch this wick now, 13 seconds. See if it closes below that. We're well below these guys already. And this level right here, let's put the sticks on here. Well below, and now below. So now we're going bearishly. Welcome to consolidation. You wanted to go higher, now you want to go lower, and now you're back inside this box. You want to see, I'd like to see just that tap right there, roll over and come lower and extend this little range here, one more, and then run for that low. So tap lower, tap here, come lower. And again, consolidation is, if we get above this level, we're looking to go higher again. And if we stay below this level, look for range extension. So you want to see this box now hold support to come lower. And if you're just consolidating, that box is a key to run higher or run lower. And once it's bounced above it once and twice, that's it. Wait for market structure shift above here or below here. Same with these two. We've been above it, we've been below it, and now we're deep back inside it to a premium inside this small range, discount, premium, right there. So you're just going to bang around between these two sticks now till it breaks out. This one doesn't have a discount, so literally back inside the consequent encroachment. Let's push lower. This comes back, taps the box, come lower, extend the range, and from here right now you want to see range go lower. So all three of them want to go lower. This one is showing you stronger lows, stronger intentions to go lower than these two right now. This one's stuck inside the box, this one's outside the box, this one's taking the lows now. Right there. See how that just supported at the box? That supported inside the consequent encroachment of the box, and that was up in the upper 75% of the box. And now the range is extended. Watch this range extend. And then this one is left to follow. Tap. Clean would be a tap right here and turn around and come back down from there. Or why that last little piece in here, right at 9:05. No, it's already digging back again. Chopsville, welcome to lunch hour, hey? Mean threshold, already wicked through that. Not a clean data point right there. Got to wick through. Back into the body of that civvy. Still inside that one. So we have a lower low, higher low, higher low. Still have not got its low taken. This low is not taken. That low is taken. So we have a little divergence going on here. If this just takes out that, extends the range a little bit, and we look for a pop back through here, and this one clears back through here, then, and that one clears through, then we're back into going long again. And keeping in mind there's a pool of liquidity up here still, and we still have that regular trading hour gap above us still. You're short on this, Hadi? This is really sloppy price action, man. Gonna have to go into Bitcoin or something like that too. There's 70%. Remember we were talking about trading back up inside here? 70% optimum trade entry reversal. If you got long off of here, remember we were talking about that? You entered long there. You pay yourself at 50%, at 62%. Look at that. Perfectly at 70%. You pay yourself, move to 62. You're out right here. Remember when we were watching that one? And you're out right there at that level. It comes back and takes you out. You're done. And now look where it's sitting. And you maxed out profit. That's why that take profit model 1 is just beautiful, because if you hit that 70% optimum trade entry reversal, which is what we were talking about when that was heading that way, we were kind of just following this up and then we got distracted and went somewhere else. But look at that. That's like, right, look at that candle's high. 110.28. 110.36. So you're just shy of it, but I would have paid myself right there. It looks like it's hit it to me, so I would have taken that. So pay yourself there, move to here, came back, take you out. You maximize your profits. Perfect entry, perfect exit. Close your trade out right there, and now you're down here, smiling to yourself, saying, "Sweet! I'm so glad I took the take profit model 1." Anyway, that's another great example of that. Find support off this level. How great is that? Look at that, all the way back to it. Hit it, because remember you never had an opportunity to get in on it here. You do right there. And the run. How nice is that? you got to have confidence that you trust that that premium level is going to hold price again now after already running out the highs. So your line in the sand would be, I don't want to see it get below a full close of that. And it still didn't close it. Just a fraction of a handle, like a penny below that. That candle's low is 36.2. This candle's high is 33.24.5. So just shy of 2 cents or $2. Nice DAX. What's DAX doing? Oh yeah, DAX did that nice little dive down into this candle's mean threshold. And now you've had a nice little reaction off that. Where are we sitting on the hourly for DAX? Get rid of this here. I'm gonna look for a 15-minute reversal. It's a 5-minute. Got nothing here. I have to wait for a market. I want to see if there's something down here on a 1-minute chart. Yeah, right here. See this reversal? As soon as you get through it, look at that, come all the way back into it right here. And nails it. Take that box right there. You take from here all the way to there and then pull it out. And look where we hit. Beautiful. Wait for that high to get taken. It does. Do you get to come back and tap it? No. Does this high get tapped? Nope. Does that high get tapped? Yep. We got a little top body above here. Came back, gave it a little kiss, and then kept going higher. Look for that high to get taken. And then you use this breaker that takes out that low. This little breaker here, all is support to go higher. So you want to see that all hold inside here now and start going higher. On 1 minute, you see a reversal here. We've traded through it, come back into it here. You're back into here. So you're between this guy and this guy right now. We lose that, look for this one. You lose that, look for that one. You lose that. You're coming all the way back into this range here. That's the DAX. Hadi, did you get out of this? I hope you got out of this. It's messing it. Tell you that it's not leaving these things untouched. 12 o'clock. Wait for a big, if you want to see a big smasher candle now, Hadi, I want to see that 50% of that. I'm still not giving up on that 50% of the range at 21.16. If you can catch that and you see a reversal and you want to go all the way down into your 600 level, I want to see that hold price. Or if it taps right there at 47, that would be a really big run. But 16.47 is actually the open. So if it touches your 830 Hadi and then rolls over and comes back down again, look for any chance to see reversals at this point and then catch a run, and you might actually get another big price leg down into your 690 level. Time for me to go. Gotta go chat with the bees and then the pro shop. Okay, Derek, have a great weekend, man. We'll see you on Monday. That'll be the last day for me. You're still short, Hadi? Ooh. Hadi, you got some cojones there. So you're willing to sweat this out running for a high? You got some cojones, my friend. I hope you get there. I hope you get this little tap above here and then just rip through and give you some money, man. Nobody likes a squeeze unless it's a hug. Nobody likes a squeeze. There's the premium box. Back up into this larger range here. Highest premium sitting up here. Oops, it goes right to, well, I guess you have to include that imbalance too. Right there. I can feel it, Eddie. I can feel you're going to just get this big slammer. It's just going to whoosh, just snap back like a whip, cracking back against you. You're going to be with you, and you're going to haul some major ducats out of that. Okay, what does our little SMT group do here? All right, so we took the low, didn't take the low, didn't take the low. See that? So SMT divergence right here, and this one here went lower. Swept the low, ran back through the level, found support at that level, ran through that level, found support at that level, went higher, ran through that level, did not come back to it, and went higher. Now we're at the premium box already. Premium box. Here's the premium box in this level here. And the premium box in this level here. All three of them are tapping it. This is the only one that's actually up inside it. So get through it, look for the highs. So of the perfect, out of these three, the perfect entry was this one right here. Discount box to premium box, box to box trading. Would have been a real sweet little run. This one here would not have given you your entrance in here, but it has traded above that level, and it came back in and tapped right on this level right here. Right on a 19 candle. Hit the premium box, pay yourself. So of all the boxes, this one here was like right inside it. This one's just tapping it. That one's just on the bottom of it, you see? Almost consequent encroachment, full fill, just tapping it. Oof. Short too. Wow, good for you. Well, that'd be a great place. You don't want to see it get any higher than that, but there's a lot of liquidity sitting there. Let's look at this. Let's look at this. And I don't want to go against what you guys want. I'm just trying to. That'll put me at the 16 right there. That's the next price leg higher. That'll give me my 21.16, and I'll be happy with that. But that's really going to squeeze you guys, and you don't want to see it get any higher than that. This is your swan song. If you come up here and it rolls over and comes back down, takes out this, you have to get a market structure shift. But if we get below 903 on the close, you guys may start, they may leave that open, and you may start getting another little run lower. You're through 50% of this wick already. See that wick? You're 50% of it's right here, and we're already up into above it already. So chances are we could make one more run up. You got this 41 above you. So you got Kamau and Hadi all for short. I want you guys to get your short, man. I want you to get your short. I hope it works out for you. We got a new member, charter. I don't think, I would imagine he's a charter member. Chris joining our group now. Welcome, Chris. Out. Yeah, good idea, Hadi. You're still short. Come out. Didn't work. No. This little level right here, first indication that it's going to go long inside the range again, is right off that little first fair value gap here. This small one here takes out the high right here on a close. So if you look at the first order block to the left of the, once it takes a low out, first fair value gap, order block to the left of it, takes it out on a close. I know there's no wick there. I tend to ignore that at times. But see how it trades back into it right here, into that whole candle, and then runs higher, takes out the high. Look for this candle here now. Runs above it right here on a close, comes back, taps it right here, and keeps going right. I love it, Kevin. If you're still on that and you're in a long position and you just hit a smaller leverage, longer stop losses, that's the way to do it, man. We got to learn from you on how to hang in there and just take that 9:30 or 10 o'clock reversal and just let her buck. If you got a higher objective, you can weather all this stuff and stay on it. This is the problem with micro analysis. You see, you can see you're just looking for internal range liquidity, and it's a totally different type of trade, right? It's a super sniper type of trading versus a more of a internal day, one shot, one kill type trade, right? So looking for these highs to get taken. There you go. They're taken now. I'll hit my 0.16. See how we traded back above that level? Found support at that level. Take out the highs, extend the range. Done. Give me my 0.16 so I can smirk and Hans and I can finally rest in peace today with 50% of the regular trading hour gap. What's your upside objective, Kevin? We're not going to leave those untouched. Hit them before lunch. You're, oh, I need that's 58.40. Oh, you're looking for 58.40 up here. Now, do you move your stop loss at all? Like, or do you just leave it long there now? And are you below here? Oh, sorry. Are you below here or are you below the lows? Like that SMT divergence there that we were talking about. Are you below that now? Like, where are you for your stop loss? Threshold back inside here. You don't want to trade back through this level and take that out. Otherwise, we're back inside the pegs again, looking for the pegs again. All of them have their highs taken now. Higher high, higher, lower. Sweep, start pushing higher. Small imbalance, traded below it, tap inside it for a run back into this range. This one doesn't have one, and neither does this, but that has a fair value gap sitting right there. You tap that, come lower. This one here, you want to get below this low, and we've already traded a wick below this low, so if we come back into a body here, tap this, mean threshold, get back through that level on a closed mean threshold. Mean threshold, this one hasn't been hit yet. We're turning on a 40. We're above that level again now. So tap this, find support, come higher. At that mean threshold. It's between the mean threshold and this candle here now. And we kept cutting through it again. Wow. Still not finding support in here. This wants to go higher. Let's see if we get a close below here. Yes, it would need to hold the ES 58 15 level. Sorry, do you need to hold this area for me? See how the level we're looking for it to break above and then go higher and take out the highs? We want to see it provide support and go higher, right? Notice how this one here just tapped it once and went higher, and so far we're not coming back into this level. Not coming back into this level. We came back into that level. The difference between the three different indices using the same data points as entrances or exits to go higher or lower. This had to come all the way back in instead of using that old high there, which is what these guys are using, right? See how that old high, that breaker candle right here, they just came back, tapped the breaker, and they're hanging on the top of it. This guy here, hanging on the top of it. This guy here, already eaten through the mean threshold of it. You see how this one is the weaker one of all three of those? In terms of SMT data points. I'm just looking at, I'm taking that whole SMT thing to the next, I don't know, next level. I'm just taking it somewhere else, not just a point. I'm looking at data points specifically and how they're using these data points to either support price or hold price and continue push higher. So are these guys just waiting for this guy to get his poop in a group, get above that mean threshold again? And now you're back into the mean threshold of this candle. So now they're all sitting in the same place. They're bouncing off that, bouncing off that. We're coming into it now. It's done its thing. Let's get on top of this and then give these guys a signal to go higher. I don't know. I'm making up a narrative here. That's holding, that's holding, that's holding. All three of those mean thresholds are holding of that last up close candle right here, and that lines up with each one of them, has that up close candle, and each one of them has the mean threshold holding. Yeah, it is a little harder to chat on YouTube. I'll try and watch you over here on Telegram as well. Oh, okay. You stop sitting there. Yeah. So you're lined up on the same one right here then? You don't want to see that break on the downside? I like that. You got that marked as well. That's good. Look at that. Rip right back into it. This guy's not. This guy has. This guy has as well. So we have 2 out of 3 hit that data point now. And we're back inside this breaker. We're on the body's open now. Or sorry, it's closed. Now that you want to see hold right there and start marching higher. You don't want to see the mean threshold give way here. Right back to the body's respecting that. Right on the low. And we're back into this guy's consequent encroachment again. And we're staying above the consequent encroachment of this, as you can see. This one went all the way to the bottom of it, actually opened below it. That little area we're looking at here. Through. We ate through that candle now. We've eaten through this candle now. Find support in that candle or this candle. Fair value gap. Held. That's got to kick out of here. It's got to accelerate through that level one more time at 41,700. It's got to accelerate through there. This guy's still holding. This guy never came back to it. If that holds off of here and keeps coming lower, not a good sign. Fair value gap. Low is taken. Run above it. Find support in here. And then you got to just get through 700. Oh, lunch hour, hey? Gotta love it. Yeah, waiting for macros. This macro now to move this, accelerate out of this consolidation. Looking at that premium level, the old premium level, still is support, still support through all three of them. This has not used that support to go higher, so I'd like to see that continue to hold for you, Kevin. And let's get another big push here. 1, 2, 3. We could still see a sizable run here. Oops. I'm just playing, but out of curiosity. Look at that. You went to 840, Chris? Oh, look at that. Or sorry, Kevin. 58.40. 25, 50, and then 7,500 terminus. That's where I want to see terminus right now. Does that make sense? You're looking at 25, 50, 75, and then 100 being price leg doubled. Terminus would be there. I'm with you there now. I see that from a price leg perspective. 2 more price legs higher to get you your 558.40. We'll wait for what's MFF first fair value gap. Digging into it again and keep rocking below it. Not a good sign. Right back inside that. Is there an imbalance there? No. No. We're wicking through that. Right back to the top of it here. Forget that level now. See how this is slowly giving up the ghost here? It came up to the mean threshold. It held price, held price, held price. And now you're dropping below a key level. Now you want to see if this holds price and keeps coming lower now. And you're looking for a long HIDI. Wait for 50% of this range. We're digging through this level here now, and we've come back inside it to go lower, going lower, through it, into it, lower. They're all going lower now. So just wait. Oh, macro fair value gap. Thank you. Thank you for that. There's your first macro. There's your 50. Into it for a short. Right there. Tap it. Institutional order flow entry drill. Take out the low. Pay yourself. Institutional order flow entry drill off of the 50. Lower. Pay yourself. No institutional order flow entry drill. Just keep going straight lower. Higher. Higher. Lower. But it still tapped that. We traded below it. Tap the important premium array, old premium array. Look at that. Use it for support. Use your macro, first fair value gap, support, trade below it. Use the old, that one and that one are actually overlapping. Pay yourself there. Now use this for support. Come lower. You want to see that whole thing hold price. I don't want to see more than the mean threshold of that. So I don't want to see that wick get taken again now. I want to see that just keep going lower. But it can come all the way back up and tap this one more time. I don't want to see a skid above there, but that wick should hold. Tapping an old low. Nice there. Institutional order flow entry drill for a continuation. We're still up. You can come up into the mean threshold of this. That is already hit the mean threshold. I want to see that hold as well. I don't want to see these wicks get taken now. I want to see them go. We've already swept below that low, so if you get back through this level going higher, and you're already in 50% of that range, so notice how I'm arguing both sides of the coin here, right? We're already at 50%. So we've just wicked into it, taking out some lows. Mean threshold of that candle right there. That little breaker right there. We're right into the mean threshold of it. You want to see this accelerate down into through 65% or 62%. Come lower. I didn't want to see the wicks go here. We're already above the consequent encroachment there. Top of the premium level again. This level right here is all I want to see that come back to. If it does, I don't want to see it come back any further than that. That's good. This is still inside here. Good enough. Lower, lower. already gone lower. Find support here off this breaker. Come on down, let's go. Keep coming lower. Look at the sticks again. We're getting back into the sticks. Look for a run back into here. Look for a run back into here, and look for a run back into the sticks here. You can see which one's the cleanest one out of the three of them. This one right here, look at that, just came back, tapped it, and now we're leaving. This one here, we have not broken below it yet. We're still waffling around it. This one here, we have broken below it. We've come back inside the mean threshold of it, and it's still kind of waffling, but at least that's, if I was going to give these guys a rating, 1, 2, 3. Best. Okay, and worst. No bodies below the low. Body below the low. Nice body below the low. Retap. Come lower. So now you want to see this candle's mean threshold hold price. I don't want to see it come back up into this again. That's got to hold. If it does come up there, you want to see no more than a fill of that and go higher. This has got to hold. Keep coming lower. We have not got a body below here yet. We just got a bunch of wicks, not doing anything. Refusing to go a body through here. Refusing. Just barely holding out there with a body below. That one refuses to put a body below the low. See how it come back? Tap it. Wick. Let's go. Accelerate through here now. Back into that mean threshold again. There we go. So in terms of a downside objective inside a small range, data points, data points, data points. Who's reaching it first? Who's resisting? Lunch hour, D, gotta go. Thanks for everything you have. Great weekend. I love you're using the SMT. Thanks, Abs. Have a great lunch hour, man. See you on the Monday. Say hi to the family for me. Give the wife a hug. Take care of your family, man. Talk to you soon. Are you still long on this, Kevin? Are you still holding out on this? This is just shy of the sticks here. We're back inside this order block. What's this one sitting here? I don't know what that is, so I will remove that. Forget that. We finally have a body below that level. Come back inside it, find support, Come on down. We're in lunch hour now. We're just shy of the sticks and NASDAQ. Not even there yet, and just short or high of the sticks here. So even just looking at this fair value gap here, see how this one just tapped into it? This one just tapped into it. This one did not, just accelerated and went higher. Your stop loss was hit. Okay. At least you made some green, man. You made some green. I still didn't get my 16, but at least those highs were taken. We didn't get the consequent encroachment of that regular trading hour gap. We almost touching that level now. Wicks getting through that, not a good sign if you're short. This is 12 o'clock now. You could see, what have you got here? Oof, we may see another run on the 12 o'clock. We may get that 16 yet. This may just rip right through all of this. We're already traded above it, trading, getting ready to trade above it now. We got 2 out of 3. We come back, find support at this. Inside, above. I'm curious to see if we do an institutional order flow entry drill, just tap in below this or come back and tap that level and go higher. 7 seconds, watch that close above. 2 seconds. Nope, not yet. Yes, and yes. So if you go, I'm just curious here. I'm going to go along there. I'm just playing an SMT, thinking if this guy's lagging, I'm just playing, experimenting here, you guys. This one's long. This one's long. Oh shit, no. Okay, that was wrong. Don't experiment. Oops. Shit. Did it go long? Did I even get it? Was there a trade on that? Oh, 30 bucks. Well, that was a crazy experiment. Didn't get above. Did refuse to go higher. Went higher. Went higher. And then quickly ripped back. So this refused to go above that. So in terms of SMT, this one says, I'm not going higher. I'm going to go lower. I'm going to resist you guys breaking that level. You went to your premium box right here. And you went to a premium box. Did you go to a premium box? Oh, right here. Yes. Breaker. Well, that's how you got. I got to try and learn how to read those SMTs clearer when they're in contrast like that. Key level. hit it, ran above it. Into the sticks, into the sticks, into the sticks. Okay. Perfect fill, almost 50%, 50%. Let's wait for him to get below that level, market structure shift, and then look for continuation on the downside. So I want to see this close below here now, come back into this and use it for a range extension. Just got eaten by that candle, yeah. It's lunchtime. You shouldn't even be trading this anyway. It's just so we can both get beat up in here. So don't feel too bad about that, Dan. Watch this level here. See how these two are overlapping? This SIBI and this BISI are overlapping. So you can argue both directions. You've swept a low, swept some lows. You trade back through this, find support inside that level and this level to go higher, and then continue running up higher, taking out this old high. Or we've now traded below this level, trade back into that level, roll over and come lower. So you can argue both directions. You've already hit your discount box here. You've hit the premium box and the discount box inside that range. Bang, bang, and now you're stuck in between. Are we going to go higher or are we going to go lower? And when you're in that and you're in lunch hour, so time, price, wait. Wait. Otherwise, again, you could just go back and forth, back and forth. And if you can argue it clearly both directions, then you shouldn't be in the trade until you see something really clean. So time's not giving you a clean entry, and both directions you can argue stay out. And it's higher resistance right now than it's been all morning. Trade it back into it. There, we're looking for it to hit it right there, and you wanted to see it go lower. And see how we just whip back in one more time? Right to the top of this level. Now, are we going to eat through this and this and this? That whole little piece right here now. You can come back up, fill that, or we close above that. And then you look for this one to go, wait for a structure shift and start running back up for that mean threshold again. Little pool of liquidity up here. Or if this holds, look for another run into this discount box here. And there's a little pool of liquidity down here. I think that's going to be it for me, you guys. It's already 10 after 10 my time. I'm going to go spend some time with my girl, go for a walk. And keep your eyes on these levels. You're inside this range here. You're right in the middle of this, or equilibrium of this whole range. There's the equilibrium type inversion. So again, using this, if we're just bouncing around inside this thing and you use this to go higher, look for that, or use this one to go lower, take out the lows. So until you start breaking out of here and seeing some market structure shift above that high and that low, I wouldn't suggest running in this small little range that you're in. The premium and discounts are literally overlapping themselves all in one or two candles. So wait for shifts to occur. and they're all in the same situation. See how the premium's been hit, discount's been hit. Back up inside this one, roll over and keep coming lower. I'm 51% bearish right now on this than I am bullish. And I won't be bullish until I see this candle get taken to the upside. Otherwise, still bearish, looking for this discount box to get revisited. But until then, be kind to each other, take care of each other, love your fellow man, woman, child, everybody, all things living, take care of them. It's a small world. It can be a rough place out there. We're in it together. We're all hurtling through space on the same rock, all trying to live for as long as we can and experience life and joy. It's not all about money. It's about people and experiences. So I hope you have a great experience this weekend. I hope you have a great time with your family, friends, and you have some joy in your life, and you can get away from the charts. Don't obsess over the charts and candles and money. Don't forget to enjoy the people and love around you. So until Monday, my friends, have a great weekend, and I will see you guys bright and early. If not, I'll see something. If I see something in the charts this afternoon, I'll post it on Telegram there, and we can keep in touch on Telegram. But until then, I love you guys. Take care.